Hello, everybody. Welcome back. Opendoor Technology got hammered today. It went down pretty bad, but we weren't the only ones. The whole stock market in general didn't do too well, right? Just tech stocks didn't do too well. AI stocks didn't do too well. A lot of the stocks in general didn't do too well. So we weren't the only ones. We weren't the only ones who went down. But let's look at the chart. Here we go in the weekly chart. As you can see, we're still within these two blue lines, but we did touch the support area, 301, $4 and $3 pretty much. That's where I drew the lines at. And we broke $4 just recently, I think yesterday. And today we almost went below $3. As you can see closer, we almost touched the blue line, but then we came back up some. And now we're at 322 after hours. We want to stay above this blue line right here, which is the $3 mark. But will that happen? I don't know. We got to find out. It's hard to say because the stock market in general is kind of trading down. And with no news coming out for Opendoor at the moment, Opendoor is probably going to trade with the overall stock market. So if the overall stock market is going down, Opendoor may go down as well. But by how much, that's the question. Will it go down a lot? Will it go down a little bit? Will it consolidate? That's what we need to look at. If Opendoor is red and the stock market in general is red, that's fine. I'm not panicking because the overall stock market is going down too. It's called profit taking during a downturn in the stock market. And let me show you a home builder, D.R. Horton, how it did today. D.R. Horton did horrible today. So Opendoor going down, D.R. Horton also going down. So a lot of the housing stocks went down today. So this is pretty normal. The red day for Opendoor is pretty normal to me. D.R. Horton went to $170 and then it dumped all the way down to $163. And here's Lennar. Chart pretty much the same as D.R. Horton. Went up, came down, went up to 135, closed around 130. So this is kind of in the same sector as Opendoor. Not the exact sector, but kind of in the same sector as Opendoor. And D.R. Horton and Lennar both went down today. And here's the hourly chart for Opendoor. If you want to see a comparison between D.R. Horton and Lennar, there it is. And Opendoor seemed like it didn't do as bad as them. They went straight down. Opendoor went down, came up some, and went down, came up some. So Opendoor is still strong. I think it's just kind of selling off with the stock market. People are using this opportunity in the downturn of the stock market to profit take. And as they profit take, the stock is naturally going to go down. As I said before, opportunities to buy the dip will be there. The reason why I say that is because if the stock market keeps going down as the trend shows at the moment, Opendoor could go a little bit lower. And I'm talking about possibly below $3. And if that happens, let me show you what area in the $2 range it could hold at. So if Opendoor does go below $3, depending on the stock market as a whole and what kind of housing data we receive, the support for Opendoor looks like around the 250 to 270 area. 250, 270. That's the lowest I'm seeing at the moment for Opendoor. 250, 270. And that's going to be a good opportunity if you want to buy more shares, 250, 270. But if it does hold at $3, then our next resistance is going to be around the 350, 360 area. Our next resistance for Opendoor. Let me show you this. As I said before, people are going to talk bad things about Opendoor Technology. Could be for many reasons. Maybe they don't believe in the stock, or they want to drive the price down for Opendoor so they can buy in. They'll talk bad about the stock just to make the price go down so they can load up themselves. Here's a news title right here. Retail investors drove Opendoor up 500%. Now the party's over. There's no reason to be saying the party's over. To me, we're just getting started. This is just a small downturn, a small bump in the road for a stock that's in the future should go up. And here's another article that I saw that's pretty interesting. Here's what's keeping home buyers on the sidelines despite mortgage rates hitting a 10-month low. So the 10-month low mortgage rates kind of made home builder, and Opendoor stock go up. Because it's good news. But why are people still not buying? This article explained a lot. And here's one paragraph that stood out the most. Even a recent drop in mortgage rates has done little to change that affordability equation. Undersupply is contributing to high prices, holding back first-time home buyers from entering the market. Here's another one. Although mortgage rates fell recently to their lowest level since October, the average rate for a 30-year fixed rate mortgage is still above 6.5%. a big leap from under 3% levels near the start of the pandemic. So that's a big difference, 3% and 6.5%. So right now, the data really isn't there for home buyers to start buying, but these housing stocks, such as Opendoor, is slowly going to start getting better. In my opinion, we can only go up from here. I don't think we can go any further down as a whole. I'm not just talking about Opendoor. I'm talking about the housing industry as a whole. We can only go up from here. How long it takes, that's the biggest question. How long it's going to take for us to go back up. But it's probably going to be a gradual increase upward, uptrend. As we slowly get data, we slowly go up. I seen a report not too long ago that there's a lot of home buyers out there. They're on the sideline. They want to buy a house, but they're waiting. They're waiting for the interest rates to drop and the conditions to get better. So there's a lot of home buyers out there. So when the time is right, you're going to see the housing industry boom again when the time is right. All right, thanks everybody. Don't forget, like, comment, if you have any questions, and definitely subscribe. See you next time. Take care. Enjoy your day.